from Parker McKay, who will provide a high-level update on some of the most challenging issues small businesses are facing in a pandemic world. Before we begin, I would like to thank the CCS&J Business Council Series sponsor, Withum, for the firm support of all the Chamber's Business Council programming this year. And I especially want to thank our friends at Parker McKay for sponsoring the Chamber's Small Business Council programming, including Mariel Gilletto, Esquire, shareholder and chair of the firm's corporate law practice, and Susan Hodges, counsel and chair of the firm's employment and labor law practice. Thank you both for taking the time out of your busy schedules to join us online and provide small business members with guidance on the ever-changing Paycheck Protection Program loan forgiveness process and how to navigate various federal and state leave laws. Before I introduce our speakers, please allow me to cover a few housekeeping items. At the bottom of your audience console, you will see the chat feature. If you have any questions during the presentation, you can submit them in the chat and we will try to get to them following the presentations. If we don't have time to get to your question, Mariel and Susan will follow up with you after the program. An on-demand version of this presentation and the slide deck will be sent to attendees later today and will also be available on the Chamber's website. With that, please allow me to introduce our speakers. As chair of Parker McKay's corporate department, Mariel Gilletto understands the practical realities and industry pressures facing her business clients. Descending from a multi-generational family of New Jersey entrepreneurs, she understands that success of an organization depends on its ability to plan for the future. Susan Hodges acts as a trusted advisor to both the public and private sectors in all areas of labor and employment law. She acts as her client's counsel and outsourced human resources department. Susan's goal is to provide strategic advice to corporations, public sector administrators, and boards so they can be confident in the everyday decisions that they make. With that, please let me introduce Mariel and Susan to take over the program. Ladies.
Thank you.
Thank you very much, Meredith, and thank you to the Chamber for having us today. So first, one thing we didn't talk about is navigating this PowerPoint. I guess let's go to the next slide first. So I am tasked with starting today's presentation, and I think what the first thing that I want to talk about is just about Susan and I and what we've been doing for the past, 6 months since March. What are we going on, 7 months now? So when everything first hit, everyone, the participants and Susan and I were scrambling to understand this Paycheck Protection Program and all the legislation that came out around the program and the CARES Act. And there were a lot of changes, and we saw advice that we were given that was later retracted, and we saw advice that was consistent and stayed consistent, and we saw changes to legislation, and there seemed to be sort of an end date to some of it. And then we went through the summer, and now we're entering society, and we're dealing with opening businesses, and we're dealing with homeschooling, and Susan and I have consistently throughout this entire process kept up with the changes in the law and then changes in the business needs. As a matter of fact, I listened yesterday to an SBA presentation for the Eastern District of Pennsylvania and learned some interesting facts about the applications and the forgiveness. And I'm sure at this point you guys have all gotten, I guess, a little bit sick of hearing about COVID and hearing about the Paycheck Protection Program, but now it's time. You've received your money, and now you want to apply for forgiveness. So we've talked about this. We had a presentation earlier in the summer, and we talked about forgiveness, but time has passed, and banks have started accepting applications, and we've seen some pressure points. And so we wanted to just refresh your recollection and maybe refresh your minds about getting that application together and some of the highlights and some of the fine points that you want to put on your application before you submit. And one thing I will say is that my slides are the old slides, so we might not go by these slides. We might have to go by my presentation rather than looking at the slides. So I do want to bring up one thing right before we get into the applications. There's a recent issue that has arisen about the loan forgiveness that some of us may not have contemplated, but others may have. And I do know that there's legislation that is being discussed to resolve the issue. But one thing you may want to talk about with your accountant is that a forgiven loan is taxable income. So let's say that you borrowed $100,000 under the PPP, and that borrowed $100,000 becomes forgiven by the SBA or by your lender. Now you have $100,000 of income that is taxable to you. So you should have a conversation with your accountant or some of your other advisors about whether or not those tax implications for being taxed on that income is more beneficial or less beneficial than just paying the interest or paying off that loan. So while I am going to talk about loan forgiveness, I think an exercise that would be good for some of the participants to go through is whether or not it's better for you to pay the tax or just pay the.
Yeah, I muted.
So now that issue you may not have thought about, but maybe you didn't submit your application yet for loan forgiveness. I think it's good sometimes that you wait because we got through some of the hiccups. But don't wait too long. There is a finite time period for you to submit your application for loan forgiveness. You need to apply within 10 months of the end of your covered period or your alternative covered period. If you wait until the end of the year, with December 31st, that would make your loan application for forgiveness due at October 31st, 2021. So you do have some time. You have some time to gather your documents. You have some time to talk to your advisors, but don't wait too long to do that because time catches up with you and all of a sudden you need to submit this application and you don't have the documents to do that. So I also understand from listening yesterday to the SBA that a lot of banks, and I'm also hearing this from some of my clients, they're not actually accepting forgiveness applications yet. The reason is some of the banks and some of the lenders are waiting to see if there's any new legislation that comes out. One such piece of legislation is that, and this has been floated, and somebody had presented a question to us about whether or not there was any movement on this legislation, but they were talking about forgiving loans of less than $150,000, so that there would not be an application, or there would be a more streamlined application than the easy application for loans that were less than $150,000. Now, those loans of less than $150,000 account for 87% of all loan recipients and only about 25% of the loan amounts. So there's a number of people that received loans in the amount of less than $150,000. So, that legislation would benefit both the SBA and the lenders and even those borrowers, because it would be an easier process to get the loan forgiven. But currently, there's only 2 forms that have been released by the SBA, and the lenders don't have to use these forms, but there's the EASY form, and that form is for self-employed or the independent contractors or sole proprietor with no employees. Another group of borrowers that can use the EASY application are borrowers that did not reduce their salaries or wages by more than 25% and did not reduce the number of hours or of their employees. Another group of borrowers that could use the EASY application are those that did not reduce their salary or wages by more than 25%. And then also they were unable to operate between February 15th and the end of the covered period at the same level of business activity as before February 15th due to compliance with requirements established or guidance issued between March 1st, 2020 and December 30th, 2020 by the Secretary of Health and Human Services, the CDC or OSHA. That second piece that I just read you verbatim, that's the safe harbor provision that we'll get into a little bit later in my presentation. That safe harbor provision will allow you to get a little bit of forgiveness in your reduction of full-time equivalent employees. So that safe harbor provision is meant for those that had to shut down their business because the governor said so, or the Health and Human Services said so. So anyone that doesn't fit into those categories needs to complete the long form. The long form is a little bit more complicated, and I would advise that you get an advisor like your accountant to help you if you are completing your long form. And with both applications, one thing that I've heard a lot from clients is the paperwork that needs to go with those applications. That is hard for business owners to do. Small businesses that need to keep a lot of documentation, it's often, you know, they receive the money and they may have commingled the money with other money and they have a hard time separating it. But one thing I want to point out is that the lenders are actually incentivized to work with you to make sure that you check all the boxes to get that loan forgiven. And the reason for that is the quicker the lenders are paid, the happier the lenders are. So if the loan's forgiven and they're getting money from the SBA, then they don't have to deal with drawing out the loan for 2 or 5 years. So the banks will be willing to work with you to help compile this documentation, but ultimately the burden is on you as the borrower to be able to produce any documentation that is requested. So things that you may want to keep in mind is you need to make sure that you can meet all the certifications set forth in the forgiveness applications, that you paid cost eligible for forgiveness, that you did not reduce the salaries, that you did not use the funds for unauthorized purposes. So in that sense, you want to maintain verification of payroll and non-payroll costs. Did you have a utility bill? Do you have your payroll run from your payroll company? Now, you also want to verify calculation of those payroll and non-payroll costs. How did you calculate how much your wages were? How did you calculate the utility bills that you paid? You also, and we'll get into this a little bit more, keep documentation of job offers and refusals, firings for cause, voluntary resignations, and written requests by the employee for reductions in the work schedule. That does not mean text messages. That actually means a written job offer. That means a written firing. That means a written resignation. There needs to be something more than a text or a casual note that's drafted. An email may suffice, but we would recommend that there be something more than just an email, something more of a writing that's acknowledged. The issue with email, and it can be overcome, but you need to make sure that it was received, right? That the person received it. So just because you shot off an email to somebody saying they've been fired, we need to make sure that they responded to you, and the same with a letter. So then you have the forgiveness application. The process is that you're going to submit the forgiveness application to the lender, and the lender is going to review all the documentation and the certifications to make sure that you use the proceeds correctly and that you check those lender boxes. They also don't want to go through an SBA review with you. They'd rather just that you are can certify that you are eligible to receive forgiveness. So again, you're going to submit to the lender. The lender may use the SBA's form, but the lender may not they may use their own form. And that may be why some of the lenders haven't actually opened up the forgiveness process yet. But just keep in mind too, that even though the lender is going to review you and say, you've provided this documentation, the SBA always has the ability to review that forgiveness. And in that sense, you're going to be scrutinized more than maybe a lender would. So you've submitted to the lender for your forgiveness. So here are just some things that they're going to check for. First and foremost, they want to make sure that you are actually eligible to receive the loan. Did you meet that certification? And that certification is that current economic uncertainty makes the loan request necessary to support ongoing operations of the applicant. Now, keep in mind, those applicants that borrowed less than $2 million, the SBA is going to presume that that money was necessary, and you are not necessarily going to be targeted or red flagged to be audited. But always keep that documentation just in case you are, because even though there's been all these articles about that $2 million threshold, you never know when the SBA just might come knocking on your door to do a review and to do an audit. So you can go to the next slide. So 2 things, eligible payroll cost and non-eligible non-payroll costs. So the eligible payroll cost, if you remember from over the summer, they decreased the requirement from that you pay 75% of the proceeds that you received from the loan to 60%. So if you got $100,000, $60,000 needs to go to paying payroll costs, and the 40 can go to other non-payroll costs. Payroll costs include costs paid and those also incurred during the covered period. So for forgiveness, for employees who were not performing work, if they were not in work, but they were still on the payroll costs, those payroll costs are incurred based on a schedule established by the borrower when that employee would have typically been in the office or in the warehouse or in the restaurant. Payroll costs are considered paid on the day that the paychecks are distributed or that you originate an ACH wire transfer. They are incurred on the day that the employee's pay is earned. So if they are incurred and during the covered period, but they are actually paid outside the covered period, then they would have been incurred. You have to calculate those costs that were incurred only during the covered period. So payroll costs, what do they include? They include salary, wages, tips, hazard and bonus pays, or commission. But they're subject to the $100,000 limitation. Remember that you cannot borrow money to pay payroll costs that are in excess of $100,000. You are supposed to use the gross amount when calculating those salaries and wages. Non-cash compensation that can be included in payroll costs are employer contributions for health insurance, and employer contributions for retirements, as well as any amounts paid by the borrower for employer, state, and local taxes. Now those contributions are not subject to the $100,000 limitation, but I do caution, I know there were questions earlier on about whether or not employers could accelerate payments for these non-cash compensation elements. That the SBA has said that you cannot accelerate payments during the covered period. If you would have normally paid those retirement benefits, then that is the same logic that you need to follow. You cannot front load all your retirement benefits for an employee in one covered period and then expect to receive forgiveness for them. There was a question raised before about whether or not what happens when an employee goes on disability during that covered period. And I will say that every situation is fact specific, but at that point, I would assume you would have received the $100,000 and then you would not be paying that employee because that employee was out on disability. So that while that employee may not count for your full-time equivalent of an employee because of some safe harbors that we'll get into, you may not have paid them either. So the question then becomes, what did you actually do with the money? Did that money go towards eligible payroll cost, or did it go towards eligible non-payroll costs? And so it's a little bit more nuanced to answer what happens when an employee goes on disability because everything is fact specific. But if you did not pay that employee during that period, then it wouldn't count towards the payroll costs that you incurred during that covered period. Also important to note that if you did take out an EIDL loan or one of the grants that were available up to $10,000, which I think got scaled back to 5 or 1 eventually, those advances are going to be deducted from your amount of forgiveness. The Congress actually said that you cannot, I don't want to say it any less than this, but you can't double dip. You can't get a grant and then also get a PPP forgiven. So they're not going to stack them on top of each other. So if you got a $5,000 advance, they're going to ask you to deduct that amount from your PPP loan. And as a matter of fact, you're required to use the PPP to refinance the EIDL loan if you actually got a loan and not the grant. So moving on to full-time equivalent employees. So this calculation is used in the long form. This is used for, you're required to keep an average amount of full-time employees compared to your chosen period that you chose to when you made the loan, submitted the loan application in the first instance. So one of the requirements for actually being eligible to receive the loan was that if you had 100 employees during your chosen period, you needed to maintain those employees throughout the life of the loan. Now, there's some exceptions to that. One exception is if this is the full-time equivalent employee reduction exception. So if let's say you had an employee that refused to come back to work because for COVID reasons or for non-COVID reasons. So this is where I was talking about keeping that written documentation that's more than a text. You need to show that you actually made a good faith written offer to rehire the employee at the same salary and the same hourly wage and the same number of hours during your covered period or your alternative covered period. That the employee actually rejected that offer. That rejection also needs to be in writing. You also need to keep a record of any employees that were fired or voluntarily resigned or requested and received a reduction in their hours. Then you also have to inform the state unemployment office that this employee refused to, they rejected the offer within 30 days of the rejection. So what this will do, if you can meet those burdens, that will reduce the number that your full-time equivalent, that will not reduce your full-time equivalent employee quotient below 1. So those employees that you were unable to hire back will not be calculated in that full-time equivalent employee. So then there's another safe harbor, and that's the safe harbor that you were unable to operate between February 15th and the end of the covered period at the same level of business activity as before February 15th because of compliance with health and safety regulations. So again, if you make that certification, then your reduction quotient is 1. The second safe harbor from the FTE equivalent is that you may have reduced your employee levels in the beginning for the period beginning 2/15 and then ending on April 26th, but then you restored them, at the end of the year, but you have to restore them before December 31st, 2020, or the date of the loan forgiveness application, whichever is earlier. So again, that's another reason why it may be a good idea to hold in submitting your loan application is if you are still trying to get your employee level up to the same place that it was before. Everybody shut down and businesses were scrambling, and now it seems that people may be able to come up for air a little bit and are starting to get back into the swing of their normal business routine, and they may be hiring again. So if that's the case, you may be able to reach one of those exemptions and receive the full forgiveness amount. So let's go on to the next slide, Meredith. We talked about the necessary documentations. There was something that I wanted to talk about before we got here. Like I said, these are my old slides, so I just changed them this morning while I was preparing for this, so they're not in the same order. So what I also wanted to talk about were categories of eligible non-payroll costs. So these are costs that were paid or incurred again during your covered period. Those costs include mortgage interest payment. Recently, the SBA in August issued FAQs that said if you refinanced a mortgage in the middle of the covered period, that new mortgage is also eligible. Those interest payments are also eligible to be paid from non-payroll costs. Covered rent obligations are included in this. This is the 40% category. So 40% of the funds had to be used towards this in order for your loan to be forgiven. That includes leases for real and personal property that were in effect before February 15th. Now, if you had a lease for real or personal property that was set to expire, let's say April 1st of 2020, and you renewed that lease, that renewed lease is also included in eligible costs. Interest on unsecured credit is eligible for borrowing. You are able to borrow that money, but you are not able to receive that for that money to be forgiven. Utility payments, that is electricity, gas, water, telephone, and internet. The SBA over the summer also issued some guidance on the definition of transportation and what costs those included, and it does not include fuel. It actually includes utility fees assessed by the state and local governments. So fuel costs are not included in eligible non-payroll costs that may be forgiven. So I guess let's go forward, Meredith. That one. Let's stay on this slide. So when we're talking about loan forgiveness, remember the SBA can review any forgiveness application regardless of size. So it's very important that you keep the documentation, and they can review that for up to 6 years. So if I were you, I'd just get a folder and put it away somewhere so that if it's ever called upon for you to prove that you were eligible to receive forgiveness, you can pull out your folder and you have all the necessary documentation. Because if you wait until 6 years when you're audited, it's going to be more difficult for you to go back through your records to find out why you did X or why you did Y. So at this point, I think while it's fresh in your mind, gather all the documentation and submit it to your bank and keep that for at least 6 years. If the SBA does review your loan, your forgiveness application, it could take up to another 5 months for your loan to be forgiven, because the lender has 60 days from the date you submit a complete application to issue you an answer on whether or not your loan is forgiven. And I say complete application because you have to dot all your I's and cross all your T's. If the lender rejects your application, then the clock is still ticking and you haven't submitted a complete application for them to review. So it's a good idea for you to try to gather all the information before you submit your application, so that you make one submission rather than going back over the documentation again and again. So the lender can approve your forgiveness in part or deny it in part, and they can deny it in whole, and they can approve it in whole. So you can, if you borrowed $100,000, you can receive $100,000 in forgiveness. If you borrowed $100,000, they may say, oh, you know what, only $60,000 of this is forgivable, which means that you have another $40,000 that you have to pay interest on. When do you begin paying interest? If you submit within 10 months after the end of the loan forgiveness period, then you will not have to make any payments on principal or interest. However, if they deny your application, or if they deny your forgiveness application in whole or in part, interest begins to accrue the day that the funds were dispersed to you. And then they end on the day that the SBA remits forgiveness. So the forgiveness amount, or you pay it in full. While it's only 1%, just keep in mind that it's retroactive to the day the bank actually gave you the money. If the SBA determines that your loan was not eligible for forgiveness and you borrowed the money before the 2 years, you borrowed the money before June 5th. You have 2 years to repay that loan. If you borrowed the money after June 5th, if the bank dispersed it after June 5th, you have 5 years. That's due to the legislation that was acted in the middle of the spring. So those loans that came out after June 5th have a 5-year term instead of a 2-year term. You have, if the SBA determines that you were ineligible for forgiveness, you have 30 days to appeal that decision. So that's when you want to start talking to an attorney or your accountant. The SBA appeal process is very nuanced and technical. So my advice would be to reach out to an attorney if you feel as though you were denied, wrongly denied, and an attorney can walk you through that appeal process. A little bit too nuanced to get into on the Zoom, but it is something that is best left for those that go through hearings with regulators regularly. So we can go to the next slide. Not yet. One thing I did want to mention is that if you were denied a PPP, because I do know that some people tried to make an application at the end of August and they were denied. August 8th was the last day. If you were denied a PPP, the EIDL is still available. The interest rate is low. It's 3.75 for small businesses and 2.75 for nonprofits. And on that conference I was on yesterday with the SBA, they were really pushing that those funds are still available. I know there's been talk about extending the PPP because I think there are still funds that are dedicated to it. I don't know. I don't have a magic ball if that will be enacted. Nobody does. If we did, I guess I would be playing the stock market, and I would have bought Nike 5 days ago. But I don't have that crystal ball, and I know that was one of the questions that came through. It's been talked about, and I don't know if it's going to be passed. So for the time being, the best advice I could give to you is, if you have not submitted your loan forgiveness application, you need to start gathering documents to support your application. You need to start talking to your advisors about what form of that application looks like. And it may not be a bad idea to wait a little bit, to gather more information, to do an analysis about whether or not it's worth paying the taxes versus worth paying the interest rate. And then put together a complete application and work with your lender if you decide that you want to go for the forgiveness, and try to get your application into the bank before the end of the 10 months. That is my presentation on PPP loan forgiveness. And with that, I will hand it over to Susan, who's going to talk to you about all your employee issues that you've been dealing with over the past couple months, and that you should look forward to dealing with over the next year or so.
All right. So hi, everybody. We really have been, I would say, in the past month or two, I have done almost exclusively FFCRA loan issues and ADA accommodation issues. So I did want to cover, just the general facts about first, emergency paid sick leave under the FFCRA. As we all know, this was effective April 1st. It applies to employers who have fewer than 500 employees. One thing that is different between the two parts of the FFCRA was that there is no minimum length of employment. So your employee could literally start, Monday, and on Thursday they are eligible for the 80 hours of leave if they are a full-time employee. Next slide. And the reasons are those that we have been probably talking your ear off about, which is, what are the reasons that someone is unable to work? If they are subject to a government quarantine, advised to quarantine from a healthcare provider, or experiencing symptoms and seeking a medical diagnosis. They may also be entitled to leave, emergency paid sick leave, if they are caring for a family member who has COVID, caring for a child whose daycare or school has closed as a result of COVID concerns, and then other similar conditions. And the reasons 1 through 3, next slide, entitle you to a rate of pay, $511 per day is the max. So that's 100% of your regular rate of pay, up to $511 per day. And the second, 4 through 6, you're entitled to 2/3 of your regular rate of pay, up to $200 per day. Sorry if I said that incorrectly. Reasons 1 through 3, 2/3 up to $511, and reasons 4 through 6, 2/3 up to $200 per day. Next slide. So, of course, part of the FFCRA was also the Emergency Family Medical Leave Expansion Act. And the EFMLA, I think, has thrown a lot of employers for a loop. There is a minimum employment length of 30 calendar days. One of the things that I have been dealing with is employees that have been out on leave, not due to COVID or school closures or anything like that. And if you have an employee that was out on leave for their own choice, if they had requested a leave, they would not meet the 30 calendar day requirement, in my opinion. We have been fighting with a few companies on this. Well, actually fighting on behalf of the companies and a few employees on this, because employees have been getting advice that they may be eligible for this. So that is something that we are certainly looking at. And now that, we're in New Jersey and we have just started school again, what has happened, and you'll see, we'll talk about it a little bit later, is some changes in this and some changes in the guidance, which have thrown people for a loop as far as what they are entitled to. And perhaps their employers said you were not entitled to something that now they may be entitled to, due to the hybrid school closures that we are living through here in New Jersey. So what is the EFMLA? It gives you 12 weeks of job protected leave. And the first 2 weeks of those leave are unpaid. The remaining 10 weeks are capped at 2/3 pay, 2/3 of your pay, capped at $200 a day. So one thing that's important to remember is that this counts toward your 12-week FMLA entitlement. If you have an employee that already took 12 weeks of FMLA, they are not entitled to it again just because they heard about the EFMLA under the FFCRA. So this law did not give people 24 weeks of leave. It is still only 12 weeks of leave. It just increased the reasons for those leaves. One of the things that we've really been dealing with a lot of employees is, what about these employees who decide that they are going to keep their children home instead of sending them to school? And what are their rights under this law if they make the decision to keep their children home? Well, the answer is, if they make the decision to keep their children home, they are not entitled to leave. So if you have an employee whose school is open to their child 2 days a week, and they say, you know what, that is too much of a headache, which I'm sure it is, I would prefer to just keep my child home and I'll come up with something else. They are not entitled to leave because their school was only open 2 days a week. They would be entitled to leave for the days that their child is basically forced to learn remotely. So it really is quite a headache for employers and employees alike. So remember, sorry, next slide. The CARES Act made some clarifications to FFCRA, clarified, what they would do is they would issue these clarifications, and then they would update the Department of Labor's website, which included a lot of, I think, very helpful explanations on what kind of leave you were entitled to. And it's written both from an employee reading versus an employer reading. They really did try to kind of address it. There's actually a section where you can click, are you the employee or are you the employer, which I think is pretty helpful. So the next slide. So what happened at the end of the summer that put all labor and employment attorneys, in the crazy house was the state of New York, Southern District of New York, sued the Department of Labor over some of the FFCRA regs. And the court decision actually invalidated part of the regulations that the Department of Labor had issued. So the question that we were all left sort of scrambling over, which was, okay, what's the scope of these this ruling? Does it apply just in the Southern District of New York, or did it apply nationally? I think you probably could have asked 10 lawyers and gotten 10 different answers. Why it should have been just nationally or just New York, or what if it applied nationally. But thankfully, after a few weeks, on a nice Friday night in September, 2 weeks ago, the Department of Labor specified that they considered that to have had a national effect. So that makes it binding on all of us here in New Jersey. So what were those issues? The issues that the Department of Labor then response, instead of actually filing an appeal or dealing with it that way, what they did is they actually revised the Q&A on the Department of Labor website and then reissued new rules, which was kind of interesting. I mean, it actually was quicker than waiting for the court process to take effect. And frankly, had they done that, we probably wouldn't have a decision unless people really filed for emergent application. So we would not have had a decision likely before the end of the FFCRA's end date. But what they did was they ruled that employer permission for intermittent leave was required. So that sounds, which is what their initial number 16 on their FAQ said. And the advice obviously everyone was giving was, well, the Department of Labor has made it clear, and under the FMLA, it's clear that intermittent leave is something that you have to work out with your employer. So you can't just take it because you want to do it that way. And what they clarified, however, was they clarified that each day of leave requested could be a separate leave request. In my opinion, that does not make any sense. But what that does mean is that, so for individuals who have children in these hybrid school situations, then each day that their school is closed to their child is a day that they would be entitled to intermittent leave. It is a crazy, in my opinion, and end result is what we thought it was going to mean. But by having the Department of Labor say each leave need day is a separate leave request really doesn't make a lot of sense, but that's what they've said, and they've put it in the regs, they put it in the FAQs, so that's what we are advising employers to how to deal with these leave requests. And obviously this is this continues to change. Obviously our school districts many are on fully remote, and then they will go back and they will likely all start in a hybrid model. So this, even if someone takes a few weeks now and then they think, oh, well, school's going to open back up, I won't need it later. They likely will probably need it later because these days each day is considered a new leave request. It was a strange route to get to that outcome, although I think most lawyers read the regs and the rules to mean that they would be entitled to take leave if their child's school was closed. So that being said, you also cannot, an employee doesn't get either emergency paid sick or emergency FMLA if the employer doesn't have any work available. So if the employer has already furloughed people because they don't have any work, they are not required to provide this paid leave to former employees or employees who have been furloughed. The employees surprisingly do not have to submit supporting documentation or information ahead of time. But for the emergency FMLA, they say as soon as practicable or after the first day of emergency paid sick leave. And really what they intended was things were so crazy and you couldn't get doctor's notes, and you frankly couldn't get notes from schools, or because most of them had just shut down, that you weren't required to provide anything to your employer before you took the leave. The employee is required to certify that, for example, their school is closed on these days, and they have to provide some information so that they're accountable to you for the days that they are saying their school is closed. And obviously, if you got to the issue where you found out that someone's school was not closed, it would be pretty easy to do so. Most of them have been posted on their websites, and I would just suggest that you call the employee and check on that issue first if they've actually said that their school is closed. I had a case where the employee went to a school that was open 5 days a week. It was open on a reduced schedule, and the employee, it was a private school. So the employee didn't like that because that meant she had to go to work. So that employee actually withdrew her child and put her child in a public school that was fully remote, and that entitled her to the leave. And the fact that she did that basically the week she was supposed to start back at work after being off for emergency paid sick leave was, she was willing to do that to not have to come back to work. So employees are getting smart on what they are entitled to. Obviously, it's pretty easy to Google it. And if you're patient, you can read through the 100 Q&As. You can pretty much find your answer, or at least find something that you might believe you're entitled to. So next slide. How do you compute the number of hours of paid sick leave if the employee has irregular hours, and how do you compute it if the hours that for an employee who wants the emergency family medical leave? So interestingly, for paid sick, if you can't determine what hours your employee would have normally worked over a 2-week period, you have to estimate them. And you have to figure out what number of hours your employee was scheduled to work per calendar day, not work day, over the 6-month period ending on the first day of paid sick leave. This average has to include all scheduled hours, including both hours worked and hours for which the employee took leave. For emergency FMLA, if it's not possible to determine what hours they would have normally worked, And again, these are for employees who, this week they work 30 hours and then next week they work 40 hours. That's what we're trying to cover here. So for the emergency FMLA, you have to estimate the number of hours based on the average number of hours that your employee was scheduled to work per workday. And in this case, it's not a calendar day. I'm not sure why they did that. Over the 6-month period ending on the first day of their paid sick leave. So this has to include the same, all scheduled hours, including both hours worked and hours for which the employee took leave. So the difference, again, is that paid sick leave is based on the average over calendar days within a 6-month period, and emergency FMLA is based on the average of work days within a 6-month period. So calendar days versus work days. I think they just wanted to confuse everyone. So the next slide, how do you compute your employer's average regular rate for the purposes of FFCRA? And it is an employer's regular hourly rate, employee's regular hourly rate. And if it is a fixed salary, you calculate the hourly equivalent to the salary if the salary is supposed to compensate for a set number of hours worked. If the salary is basically to compensate an employee no matter how many hours they worked, then you just add up their salary over the last 6 months and divide it by the hours the employee worked within each work week of those 6 months. And if you don't know, you should, but if you don't know, you have to reasonably estimate. Again, they kind of left that a little bit up in the air. So rounding of hours, the next slide, that you can, for the purposes of FFCRA, you can round for the purpose of computing hours. If you normally, however, round using tenths, you cannot round to the nearest, for example, half hour or something different for the purposes of FFCRA. So you should use whatever rounding principle you normally use. So when can an employer require that employee use their existing leave? Like if you already give employees leave, and when does the employee get to pick? This has been definitely a challenge for employers. So the FFCRA paid sick leave is in addition to any paid or unpaid leave provided by the employer. You cannot, and I repeat, you cannot require an employee to use their employer paid sick leave. So just because you were generous, you are now being required to do something additional. And that has been certainly maybe a surprise, I guess, to some employers that they weren't expecting this was going to be on top of what they're already given, but that is what it says. An employer may also require an employee to use their employer paid sick leave for childcare, but it would run concurrent with their EFMLA. So another thing to check is if your workplace has a collective bargaining agreement, you have to also apply what your collective bargaining agreement says. And many collective bargaining agreements actually say whether or not the leaves run concurrently. We always recommend that you say that they will, because that obviously is better for the employer. And your handbook should say the same thing. If you have a policy and you have a policy that outlines the specifics on family medical leave, it should say that, family medical leave and New Jersey family leave and any other leave entitlement would run concurrently. Because if they don't run concurrently, your employees could get 12 weeks and then another 12 weeks. So the employee may also elect, but can't be required by the employer to take paid sick leave under the Emergency Sick Leave Act as part of their first 2 weeks of the Emergency Family Medical Leave Act. So why, I guess, would an employee do that? So the way it's worded right now, an employee has to take the first 2 weeks of emergency family medical leave are unpaid. And then the 12 weeks are paid at the 2/3 up to $200 a day. Well, I would assume most employees would say, well, I want to be paid for the first 2 weeks. Well, they can use their first 2 weeks under the emergency paid sick leave to use that time. And I think a question that I've gotten is, why wouldn't anybody want that? And the reason is that they would get more protected time off if they choose to save the emergency paid sick leave time until they've used up all of their emergency family leave time. And it could be a lot that, they would then have 2 weeks plus 12 weeks plus another 2 weeks. So, people have figured out how to stretch out the amount of leave that was proposed. And I think one of the things that made this so confusing is when the FFCRA first came out, all of our schools were closed. They certainly didn't write this with the hybrid models in mind when they drafted the FFCRA and the rules for the FFCRA. So now that our schools are back across the country using these hybrid models, they have obviously had to adapt to that, and that is what the kind of newest amendments to the rules under the FFCRA have covered. So next slide. So New Jersey, Governor Murphy, also in March, he amended New Jersey's Earned Sick Leave, New Jersey Family Leave Act, and Temporary Disability and Family Leave Insurance for New Jersey. It basically just expanded the Earned Sick Leave law in New Jersey to cover a COVID type situation. It was a little more general with the wording. It says it was expanded to include when an employee cannot work due to governor declared state of emergency and instances of quarantine. I'm hoping that we don't need to use it again, but it certainly was written so that you didn't have to remove it or that it didn't expire. New Jersey Family Leave Act was also expanded to provide leave for care for a child who was sick or whose school was closed, care for a family member who was sick, or to care for a family member who was self-quarantining. So all of those were changed in March, and the same with temporary disability and family leave insurance. One thing that's important to note for how they, these are the definitions here, but the important thing is that they eliminated the 7-day waiting period that was normally part of temporary disability in New Jersey, and that is no longer applies for these leaves. One of the things that I think I really, when HR, you have employees come to HR, as far as like unemployment and their options for collecting unemployment, I don't think you should be giving someone advice. First of all, they shouldn't be collecting unemployment if they're still employed by you. There are reasons they can collect if, say, you've reduced their hours, but I don't think it's HR's job to kind of shepherd employees through that process, because I don't want people, not because I don't want you to help them, and I'm sure that you, as most people that go into HR, that's, kind of your mindset is I'm trying to help employees figure out what they can and can't do. But obviously, really, I don't want you to say something that you not want to guarantee someone that they're going to be entitled to unemployment when they might not be, depending on how they quit, why they quit, and all of those normal factors that go into unemployment. I do know that New Jersey's has kind of caught up with the unemployment applications from all reports. They are certainly getting it out to people a lot sooner than they were in the beginning, because they were just bombarded and no one was prepared. The government certainly wasn't prepared for the number of unprecedented unemployment applications. So another issue that we have been dealing with almost as much as the FFCRA leaves are other requests for accommodations under the New Jersey Law Against Discrimination and the ADA. So what do I mean by that? First, both. So New Jersey Law Against Discrimination is basically the state equivalent to the Americans with Disabilities Act. They're not exactly the same, that is for sure. But basically, it does provide that employers have to provide a reasonable accommodation absent an undue hardship. And what does that mean? Well, unfortunately, if you think about the New Jersey Law Against Discrimination and the Americans with Disabilities Act, they were not drafted with the pandemic in mind. They were drafted to deal with people that have serious health conditions, in a normal course of life, and things like car accidents and things like that. It certainly wasn't intended to cover a pandemic. And what this has caused is many, many requests for accommodations under both of these laws for employers. And the law on what is an undue hardship is extremely generous to employees and very, very difficult for an employer to prove that it would be an undue hardship for them to grant most accommodations. And you can never say, well, it just costs too much. So what happens when you get a request from an employee for a reasonable accommodation? And one, I think process is critical to you as the employer. It is, you should be documenting this just like you document everything else. It is actually triggered as soon as you know that an employee might have a disability that would entitle them to an accommodation. They don't actually have to say, I have a disability and I want an accommodation. They don't have to use the magic words. But if they are asking questions or making comments to you at the office or virtually that they don't want to come back because of X, Y, and Z, you basically are then required to start what they call the interactive process. And the interactive process is very important for employers when really trying to determine what would be a reasonable accommodation. So when that process starts, you cannot ask medical questions. Most employees come in with the doctor's note that says, this is my patient and they require an accommodation. And it's interesting because you really can't ask medical questions, and you can only request medical documentation if the disability or accommodation are not obvious. Now, that's not usually an issue, getting medical information, because they usually start with a doctor's note. But one of the things that we're seeing right now is an overwhelming number of employees asking for accommodations because they are high risk. You can go to the next slide. So high risk employees are those that, they might have health reasons, perhaps age, and there's obviously been a lot of discussion about race and whether or not race is a category of high risk employees. And the CDC is regularly updating the list of conditions that could put a person at high risk or possibly at high risk. And at this stage, I think there's enough medical data to support that there are so many reasons that an employee might be entitled to an accommodation. What if someone is requesting an accommodation? What might they ask you for? And that's one of the things that, I like to have a form that employees, give to the employees and say, this is the information we need, and then they can give it back to you. And usually it's something, from their doctor that supports their request for an accommodation. Now, what it used to be was somebody wanted, they wanted a special chair or a higher desk, a back support. There's a lot of things that they would ask for that made sense. And I think in the beginning, there was, I don't have to provide people this extra stuff. They can get it themselves. Well, in fact, if they have a disability, you do have to provide this to them under the ADA and the New Jersey Law Against Discrimination. So that being said, these requests that you're seeing now for childcare, they are not requests for an accommodation. They are simply requests for leave. So they are not the same thing. And employees who, for example, have a high-risk family member, they might be entitled to take emergency paid sick leave if they're actually caring for the family member, but they are not entitled to an ADA or NJLAD accommodation just because there's a family member in the home that has a high-risk health issue. And obviously another large, I think yesterday I heard it on the radio 4 times, you turn on NPR and there's a story about how mental disabilities have been increased greatly by COVID-19. And I think I see that. We're certainly getting requests of, the anxiety and those people with those types of mental health issues are just, they're really aggravating those health issues, I think understandably. And one of the things under the ADA and the LAD is we lawyers say you're called the eggshell plaintiff. So basically, in most of the cases, it doesn't really matter if, for example, if I was particularly fragile as far as my mental health and COVID kind of put me over the edge. As my employer, they would have to deal with the fact that this affected me perhaps more than it would affect Marielle. So, you know, these are all very individual issues. And I think one of the other things that is strange is that COVID-19 itself has not, you know, having COVID has not actually been deemed a disability yet. I think it would be. I think if someone has COVID-19 and they are genuinely sick, you know, and one of these people that ended up on a respirator, then I don't know how that would not be considered a disability, because they, you know, obviously are looking at the health effects as they continue. But as of now, having COVID-19 does not quite qualify as a disability. But before you do anything on that, I would definitely check back with us before you make any decisions. And again, one of the issues with accommodations, and I had someone call and they said, I'm just done with accommodations. We've had 20 requests and I've addressed them all. I can't do anymore. Unfortunately, that's not an appropriate response. You have to say each individual case, you have to address it on its own. You have to meet with the employee, whether virtually or in person, and go through that interactive process in order to satisfy the requirements of the ADA and the NJLAD. And one of the other requirements that I think it's important that everyone remember is that, you know, an employee may come into you and say, I want X. I want to work remotely for the next, you know, 5 months. And that may or may not be a reasonable accommodation in your case. It really will be very fact specific. It will depend on what their job is, you know, you obviously, if you have someone who is, for example, at our office, someone who is a receptionist whose job it is to greet people at the front and give them access to the building, it would not be very likely that a reasonable accommodation would be that individual would be entitled to work remotely. So every facts, you know, situation should be analyzed on its own. Briefly, I'd like to talk about business, you know, kind of reopening and updating your handbooks and new trainings, and what measures our employers are doing to keep employees safe. One of the things about updating handbooks, a lot of people ask, should I put an FFCRA policy in my handbook? My recommendation would be you just have a side policy, because as of now, the FFCRA expires on December 31st. So you don't need to add it into your handbook. You're required to abide by it already. So I don't think you need to include that as part of your regular handbook, but it is a policy. I mean, it is a law. So whether or not you have a specific policy outlining it doesn't matter. It is always good to update and advise people if there's something new. I know that we did that here, and I'm sure it was appreciated, so that people know what their rights are. One of the other policies, you know, looking at policies on telecommuting, what kind of health screening policy are you going to have? What kind of containment policy are you going to have? You know, one of the funny, I think there's been, you know, I've never seen a lot of employee handbooks that have a travel policy, but a lot of employers right now are saying, I need to have a travel policy, because what we've seen already, particularly at the end of the summer, was people took a vacation because they had already paid for it to a state that was on our travel advisory. And then when they came back, they were required to quarantine, and they would take their vacation and use their vacation days and then come back, and they would be entitled to 10 days of sick under the emergency paid sick leave to quarantine. It doesn't seem like that would be very smart planning on behalf of an employee, but I think most employees are like, these are 10 free sick days that I got, so I'm going to go on my vacation and I'm going to come back and I will be required to quarantine and I will get 2 weeks at home, and hopefully they stayed home. The other issue, as far as policies go, and I've gotten a lot of questions in the past 2 weeks about this. So in August 8th, Trump and the Secretary of the Treasury announced a federal tax holiday. So the federal tax holiday is something that allows an employer to defer FICA withholdings for employees. This would only apply to employees that have wages of $2,000 a week or less. So this is not a mandated policy. This was likely a political, this looks really good. I can, for the next 3 months, people won't have to pay, or 4 months, people won't have to pay their FICA withholding taxes. But the problem with this, as I see it, is that one, it's something that an employer has to implement and offer. And two, obviously it doesn't apply to all of your employees. And here's the problem that I think is bigger than the withholding deferment, is that come January 1, the employees have to pay this back. So then in January, they'll be paying 2021 FICA plus the FICA that they didn't pay at the fourth quarter of 2020. So you may get a lot of questions about the federal tax holiday, and my strong recommendation is that you do not do it. It is not required. It is, I would say, almost universal that employment lawyers think this is not a good idea. And there's also questions about how would you collect if someone left and hadn't paid back all their FICA withholdings. Are you as the employer required to pay that back? Even if it's not a lot of money, it's a lot of headache. And I just don't think it's a very good idea. So another policy that obviously is important, and probably if your company didn't have a telecommuting policy before, most do now or have some form of that. And obviously things to look at are, phase in return to work. You have to make sure that as of now, we still have restrictions on number of indoor gatherings. What type of accommodations are you making for employees? What hours you want employees to be available. These are, there really are a lot of issues when you have a telecommuting policy. And I think we were all forced to do them very quickly when we shut down in March. But it's really a good time to take a look at your telecommuting policy and see how you want to implement it, really more on a permanent basis. I know some businesses are looking at these telecommuting policies and thinking, I don't need this huge space anymore because my employees have demonstrated to me that they are able to work from home, and I don't need 15 offices. I can do with 8. So, there could be a lot of benefits to a telecommuting policy, but obviously, you need to look at all of those issues before you draft it. And again, the same, I would say, with any other policy is implementation, and you need to make sure that when you are implementing your policies and you're treating people the same. You obviously can't do something for one employee that you're not going to do for another that is kind of different than what your policies say. And when you start making exceptions for one, there's a good chance that other employees will say, well, you made an exception. I know that so-and-so is doing this. Why can't I do that? So you just need to be careful when you're considering doing a telecommuting policy or any policy that might allow you to treat people differently. So another issue is obviously a health screening policy. For example, we have a little app, and every day we have to log in before we get to the office. We have to, provide information about taking our temperature, if we've been exposed, what health conditions, what have we had any headaches or any other symptoms. And a lot of that obviously is you require your employees to be honest, because the issues that I know everyone is concerned about is, well, if I say yes and I submit that and I go to work, but I end up having COVID, this person is now exposed whoever they were in touch with that day, and whatever surfaces they touched in your workplace. So it's a strange issue. I have a lot of companies that are actually, taking the temperatures, like when employees enter, they have a little screener like here, and they seem to be working great. So because of the community spread of COVID-19, the EEOC actually kind of changed their normal rules and now allows employers to conduct medical tests specifically related to COVID-19. Again, can't pick and choose. You have to administer, if you decide you're going to take temperatures, you should take temperatures of everyone upon entering. Don't just take mine and not Marielle's, because that wouldn't be fair to me. And again, confidentiality of any medical information has not changed, so that should be kept in a separate file, not their regular personnel file, and only HR should have access to that. So with regard to temperature checks, visual kind of inspections to see what employees, did they look sick? That might give you a little bit of pause. Temperature checks should use a non-contact thermometer. Obviously, proper PPE should be worn and barriers or partitions put up between the screener and the employees. You'd have to train anyone that you want to be the screener. Obviously you can, if you see that someone appears to be sick, if they are, sweating and shortness of breath, they look unwell, you certainly, have a right to ask questions related to COVID-19 symptoms and exposure, testing, travel. So lab tests, you can actually require them before allowing an employee to return to work. Obviously, you will have to pay for that. I think there's a consideration right now about the antibody test and whether or not employers want that. I would say, that's not something I think most employers are requiring, because the antibody is just going to say that they had it at some point in the past. It's not really going to help you. So I'm not sure why employers are doing that, but I do believe some are. So again, the leave policies, specifically whether or not you want to add them into your handbook. Like I said, I don't think that the FFCRA leave policy was something you need to include in your handbook because it expires on December 31st. But the amendments to New Jersey Sick, New Jersey Family Leave Act, New Jersey Family Leave Insurance, temporary disability are not temporary. So you should update your policies to reflect the recent amendments that were made in March. And then you should also, look at your policies about paid leave and whether or not, you need any changes there. Another issue about a travel policy is, do you want to limit non-essential business travel? I think that this is not a policy that I have seen before COVID, but, because of the issues that we've had with people literally taking a vacation and then being required to quarantine, but the issue is, I think you need to, if you don't have such a policy already, then, I would want to make sure that you implement it and give people notice as far as anyone that might be taking a vacation to a restricted state. And I think yesterday they added 5 more. Ones that were off went back on. So it's interesting too, if we have any Gloucester County employees or employers on the call, yesterday, Gloucester County and Ocean County both are over what our travel advisory. So if you weren't living in Gloucester County, which is in New Jersey, you actually couldn't come to New Jersey because Gloucester County and Ocean County are so high as far as what their level of number of COVID cases are. So that's a little interesting, but no one has made any announcements about making people from Ocean County and Gloucester County to quarantine within the county. So I think that's probably a good thing. So real quickly, I know, sorry, I'm taking a little too long. What happens if an employee refuses to return to work? If it's because they are making more money on unemployment, and I would advise the employee that the offer of work will be reported to the state and their benefits may stop. They just simply can't say, I don't want to come to work. They certainly can resign, but if they resign, they will not be eligible. They shouldn't be eligible for unemployment anymore because you offered them a job. So if there is no childcare, I think consider if remote work is possible. Obviously, then you have to consider if they're entitled to any of these leaves that we've discussed. But I would be very careful about terminating an employee without looking at all of those leave options, because it is possible that they are eligible for one of those leaves. If you have an employee who is simply afraid to return to work, again, you could consider if remote work is possible. Again, consider if they're entitled to any of these leaves, consider if they are high risk, but simply an employee being afraid to return to work, if they don't otherwise qualify, you do not have to keep them on your payroll. So another issue is, what about employees who refuse to wear employer required face masks? So if you have a policy, or you're going to say, this is why we're requiring our employees to wear face masks. Absent a need for accommodation, there may be medical reasons why a person can't wear a face mask. The employer can actually suspend an employee who refuses to wear a mask. I actually had that happen this morning. Someone who works for a school was not wearing their mask and they were immediately suspended. And that's because it is mandated by New Jersey that all school employees must wear masks at all times. So if you have an employee preference policy, which I don't think most employers are doing right now, but if you don't mandate them and your employee wants to wear one, you should let them wear the mask. If the employee refuses a temperature check, again, it should be your policy. You should send something out that says this is why we're requiring them, and these are what the consequences are if you don't comply. There obviously can be disciplinary action. I think that's absolutely justified by an employer right now. Again, I would make sure that you advise the employees ahead of time of what the consequences would be for non-compliance, because you want to make sure that they don't have find out why are they refusing to get tested. Is there a religious reason that they're refusing to get tested? So there are definitely nuances to these issues. I hope that we have answered a lot of questions about the leave laws, the request for accommodation. I know I have basically been doing that pretty much for the past month and a half, particularly with our schools opening on these hybrid basis. And I know what has happened is some of our schools were supposed to open on a hybrid basis and then they all went virtual, kind of at the last minute. I do think that was something, there was a reason for it. Some of those issues are actually what happened was there were a lot of school employees that then requested leaves, and the school literally got to the week before school and realized they don't even have enough teachers and they can't find substitutes to start the year. That and many of them were delayed receipt of PPE that they had ordered. I know that some companies, had planned on opening, and obviously they're requiring certain employees to wear masks, but there were other things that they wanted to get and were unable to get, so that they might have delayed a re-entry for employees. So I hope we've answered some of your questions. And I can't see.
Thank you so much.
Yeah. Oh, you're welcome.
Thank you so much for sharing all of these important topics with us today. It's so important for our small business members, and so many of them tuned in today. We did get some questions that were submitted in the chat. So what we will do is share them with Mariel and Susan, and they will follow up with you. I just want to take the opportunity to once again thank Parker McKay and Witham for sponsoring our Small Business Council series. We will be sending out an email to everybody that participated today. You will receive a recording of this session. We will also send you the updated slide deck as well as a survey. We would love for you to take a few minutes to provide feedback on the webinar to help us plan future programming. And if you did not have the opportunity to submit your question in the chat today, please take the survey as that opportunity to submit any additional questions that you may have. Just once again, would like to thank Mariel and Susan. And if anybody has any questions, you can follow up with the chamber. Thank you so much and have a great day.
Thanks, everybody.
Thank you.